Welcome to Trader TV Crypto, your insight into the trading climate for professional cryptocurrency investors. I'm Dan Barnes. In April's show, we'll be talking with Bobby Cho, Global Head of Trading at Cumberland, part of DRW, about the challenge of making markets and proprietary trading in the cryptocurrency market. Bobby, welcome to Trader TV.
Thanks for having me.
You're welcome. So to start with, could you explain what Cumberland's role is in the cryptocurrency market and what's your motivation for trading crypto?
Sure. So Cumberland's a leading principal trading firm in the cryptocurrency space. We specialize in institutional liquidity providing. So what that basically means is for any entity or institution out there, such as a fund or other type of market participant that's looking for exposure into this space, it's looking to either buy or sell large amounts of cryptocurrencies, we provide that type of liquidity. I guess for motivation in these markets, so Cumberland was started in 2014. We are a wholly owned subsidiary of DRW, which was started in 1992. And so we really take the best practices of the last 25 years that DRW has implemented in these markets and apply that into cryptocurrencies. But really in 2014, that was Bitcoin when we had started the business. And so we had kind of saw the evolution of other markets and kind of applied that to these markets today.
Okay, so in that 4-year period, how would you say the markets have evolved?
I think they've evolved quite a bit, but I'd still say that the market is still very early. So what I mean by that is in 2014, really we started with one cryptocurrency, which really was just Bitcoin. Since then, today we have about 1,500 different cryptocurrencies, really only about 50 to 100 with any meaningful market cap. But at the same time, you're starting to see infrastructure develop and other participants kind of latching on to the marketplace to kind of build a more robust and vibrant community.
Mm-hmm. Okay. But what sort of challenges exist in providing liquidity in a 24/7 market like this?
Yeah, you kind of hit it right on the head in terms of the market does not sleep. It's 24/7. And so there's as much trading as we do during the day in terms of providing liquidity. We manage risk throughout the day as well. And so many of the challenges can be, obviously, the markets can be thin and very volatile. So we trade anywhere up to about 35 different cryptocurrencies. But really outside of the, let's call it 5 to 10 top by market cap, liquidity kind of dries up. And so always being aware of just the risks involved in these markets are something that we are very acute of.
Sure. Okay. Looking at the market as a whole, where do you see the capital coming from that's moving into these markets?
Sure. So I'll start from really the beginning of Cumberland and what we've seen kind of change in the profile of the investor or the counterparty that we face off with. So in 2014, really at that time, you saw a lot of kind of early adopters involved in the space and infrastructure providers at that time, whether it's miners, payment processors, or other companies like that. That's really shifted over the last few years, but really over the last, let's call it 12 to 18 months, where you've seen the evolution of cryptocurrency focused hedge funds, along with traditional hedge funds, high net worth individuals, and other types of entities out there.
Okay. Are you active in the derivatives markets for crypto too?
We are active in derivatives markets. When they opened up in Q4 of last year, we have been participants on those exchanges. But at the same time, I think it served as a very basic function to get folks who were not involved in this space exposure to either the price or the volatility. Obviously, we still see those as very small markets and growing, but our main focus on the desk is the cash or the spot market, which trades multiple more times than the futures markets.
Sure. Do you expect those derivatives markets to have an impact on the spot market moving forwards?
I still think it's the spot and cash market that kind of leads and dictates where the futures markets go. But, we could see that evolve, especially as more and more other types of contracts or other types of products become available to the market. We still see that the spot and cash market continue to dominate.
Obviously, as you mentioned, DRW has a lot of experience in different asset classes. If you were to look at cryptocurrencies and compare that with other instruments, how would you describe the way they trade?
Yeah, in terms of the way they trade, I think a lot of people like to compare it to FX. Just the nature of the market and the market participants. It seems like it's an easier kind of educational kind of grasp in terms of cryptocurrency markets versus FX. And you're also seeing a lot of infrastructure providers who are in the FX space apply that knowledge over to the cryptocurrency space. that's on the trading side of things. I think as an asset class, that's one of the fascinating things about cryptocurrencies. You can't really pigeonhole it into any existing type of product or asset class that's out there today, because it has aspects of a currency, has aspects of a commodity, and other things like that.
And do you see the market structure changing as you see the market maturing? Because I understand you've got exchanges where most of the trading takes place. The coins themselves or currencies are issued and settled on the blockchain or a similar distributed ledger type technology. So it's quite an interesting and different market structure.
It is. The market structure is still evolving. And again, I still think it's in a very, very early stage here. And one clear example of that, and you see it in traditional capital markets, where you see a clear breakdown of roles by the exchange, by the custodian, and by the clearer. In the cryptocurrency side of things, exchanges actually serve as all three of those functions. So, for example, in equities, you have the exchange such as NYSE or NASDAQ that serves as the matching engine and the venue to trade. Then you have custodians out there like Bank of New York or State Street. And then lastly, you have clearers like the DTCC that's out there. In the crypto world, the exchange is actually all three things bundled into one.
Mm-hmm. Okay. And does the settlement model using distributed ledger technologies or blockchains, does that impact trading at all?
You know, it hasn't. I think there are two very kind of avenues that people are taking related to distributed ledger technology. There's obviously the public ledger that we utilize in terms of trading in Bitcoin or Ethereum or other types of cryptocurrencies. And then there's other participants out there that utilize private blockchains for very specific use cases tied to very specific products.
Sure. Okay, thank you. Now, we've seen lots of volatility in the market at the start of the year. How has that impacted liquidity?
You know, I think volatility tends to obviously bring out a number of market participants and that want to interact with our desk. But aside from really what happened in January and February, we've kind of seen the market kind of dampen out a little bit over the last, let's call it 4 to 8 weeks now. It's picked up in the last week, and we'll see kind of what happens here. But obviously, what we do in terms of providing liquidity to market participants is, one, help dampen volatility, but also serve as kind of a marketplace for people to interact with.
That's great. Thank you very much. On the point about counterparties, how do you see your counterparty list changing, and how is the overall investor base changing as the market matures?
Yeah, I think going back to the example that, we kind of had one foot into the crypto world, right? Whereas we were leveraging a lot of what DRW was doing, but we were preparing on the other side for kind of the influx of financial institutions entering the space. Well, lo and behold, it kind of happened a little bit sooner than I think anybody would have anticipated. And so we kind of sit in between these two very unique asset classes and markets, and have a number of market participants that dabble in both. I think that will continue to happen. I think you'll continue to see kind of overlap related to whether it's bona fide traditional financial institutions entering into the space, or folks that come from that world that would like to set up entities that focus solely on crypto. And so I'd say in terms of just the profile of the trading entity facing us, it's been really early adopters, then the high net worth individuals. Now you're seeing funds and other institutions enter the space. That's
great. Thanks. Very clear. And finally, we have heard a lot of comments from regulators about what they might do in the market. What's your expectation for the way that regulation could impact the crypto market in the near future and the medium and long term?
We're in support of mindful regulation. One, because there's a lot of development and entrepreneurship that's going on in this space. And so we don't want to stifle that. We want to see this asset class grow as a whole. And we think regulation, mindful regulation, will help kind of mature this asset class and really take it to where everybody's hoping it goes.
That's great. Bobby, thank you very much.
Thanks for having me.
I'd like to thank Bobby Cho of Cumberland for sharing his expertise in this sector, and of course you for watching. To catch our reports on fixed income or equity markets this month, or to subscribe, go to tradertv.net.